Welcome to Brookfield Perspectives, a podcast that explores the Brookfield ecosystem's role in creating sustainable wealth on a global scale. Today, we have another edition of Deal Debrief, where we get the download on recent transactions from the people who put them together. On this episode, Craig Wright and Matt Homan from our private equity business join us to talk about Fosber, a manufacturer of machinery for corrugated paper products. Matt and Craig, welcome to the podcast. It's great to have you. Let's just start with you introducing yourselves and telling us a little bit about what you do at Brookfield. Matt, do you want to go first?
It's great to be with you today. Matt Homan, I'm a managing director in Brookfield's private equity business on the business operations team. I've been with the firm for a couple of years, and like many of us in our operations team, I was a longtime business operator working for global companies like General Mills, and I worked for a company called Polaris Industries for 16 years, leading large parts of that business. And then I was a CEO of two companies. And after I left my last business, I was actually introduced to Brookfield through a deal, and I was an advisor to the firm for a while and decided to join the firm. And really what got me excited and made it an easy decision to join the firm was our really unique, I think, approach to how we do investing, where business operations and folks like Craig and I work hand in hand on every deal, just like we did on the deal we're going to talk about here today. And so it's a real exciting way to work as an operator, and I've enjoyed it immensely since I've joined.
Craig, what about you? What do you do at Brookfield?
Thanks for having me. My name is Craig. I've been with Brookfield almost 9 years now. I'm a managing director and I sit on the investments team out of New York. I actually literally sit right across from Matt, which just kind of shows how much day-to-day interaction we have. But at Brookfield, I predominantly cover industrials, so sectors like packaging, chemicals, industrial tech, things like that. I'm currently involved with a couple of our other investments, and that's where I would have spent some time doing a little secondment. And I'm sure we'll talk about that throughout the course of the podcast, given one of our associates has the fortunate experience to be seconded in Lucca, Italy for 6 to 9 months. But anyway, yeah.
How do I get on that train? So yeah, let's stick with this because obviously, Craig, you have a lot of experience with companies in this sector. Can you just unpack for us a little bit, no pun intended, what is Fosber? What does the company do?
So to put it very simply, we've all received at some point an Amazon box, I'm sure, which is known as a corrugated box. Fosber makes the machines that make those boxes. It sounds super simple when I lay it out like that, but there's a lot more complexity, automation, and things along those lines that really go into it. And where Fosber really succeeds and where we, from our investment lens, really enjoyed or liked the business was its really strong after-sales network, where the business pushes through anything from parts, technical service, things along those lines for each of their machines. And it's a really, really sticky form of revenue for these guys. But importantly, it's super, super important to their customers.
So if they're using the machinery, they work with the same company for any and all needs after that.
Exactly. Particularly given how complex these machines are, you traditionally will have a lot of spec'd parts or engineered parts directly from Fosber, so you really can't go anywhere else.
It's helpful also sometimes to give some context because, as you say, a corrugated cardboard box looks very simple to us when we receive however many we do every week. But how does a corrugator make that kind of box? Matt, I think you have some experience with this from your paper days.
It's probably worth mentioning. In my previous life, and sometimes this just happens on these deals, I was a CEO of a business called Liberty Diversified International, which is a larger independent packaging business. We had a paper mill. We had over 20 packaging plants, corrugated box plants. And I had the opportunity to actually purchase a Fosber machine and put it into one of our facilities in the Midwest. So I got a firsthand knowledge and a chance to meet the team, see really the power of the Fosber team up close. One of the things they do exceptionally well is customer service. It's actually remarkable how well they do customer service, and I got to experience that firsthand. And I think those relationships were helpful in the deal. But the simplest way to think about a corrugator and what it does is many of you have probably seen pictures of these giant rolls of brown paper that come out of a paper mill. What happens is a box plant literally cannot operate without a corrugator. So we talk about an essential business. This is truly essential to a box plant. You can't operate without a corrugator. So that paper comes in, and there's these football field long machines called corrugators that Fosber makes. So if you think about a box plant, you think about how they operate. If you're making corrugated boxes, you're making pennies on a box. You cannot go down. You need to run volume. And so if the corrugator breaks, the corrugator doesn't work, you're in deep, deep trouble. And so Craig alluded to it. When we first started looking at this business, you think about it as an industrial machine business. And I think in a lot of ways that is misunderstanding the business. Really, the magic is after the machine gets put in, it can't break. So for 20 years, you get really outstanding high margin after sales parts, after sales service, et cetera. And it's really, really critical. So the box plant can't mess around. And because Fosber does such a great job on it, they really have a phenomenal business. And we think opportunities to grow that business as we move forward.
Yeah, so you're teaching us it's not just the technology itself, but the actual installation and then the operation of this thing is crucial to whoever's using it.
Absolutely.
Craig, in looking at the investment originally, what kind of customer base does a Fosber have? Are they global? Do they have to have customer service teams at the ready wherever they are? How does that break down?
Yeah, they are a global business. They operate in all, I'll say, developed markets today. And their customers can be the big guys like an International Paper or a Smurfit Westrock, or some of the smaller independent guys like Matt back in his former life. But it's important because each of those even larger and smaller guys are constantly trying to find ways to be more efficient, to save money. Because as Matt alluded to, these machines, you're just spitting out so much paper at any given time that you're not making substantial money unless you do it in a very rapid and fast and automated manner. What Fosber's really done is they've not only developed a technician network on the ground in each market where they are to support those customers, but that technician network can see the customer needs and help them automate or help them find ways to improve that efficiency over time. And it's a really, really valued and very sticky relationship. And Fosber has done a really nice job in this, which is why they've grown so rapidly over the last 10 years and really come out as, I'll say, a very strong number 2 player in the industry.
It's not like there are thousands of Fosbers that exist. These companies have to become real experts in what they do. And then they become, Matt, as you say, very good at servicing their customer and making sure that they're providing not just the best product, but really the best service. So how does an opportunity for this kind of transaction come about?
It starts with a lot of pre-work. You need to identify what sectors or areas of focus you want to go after. And particularly given we have a very, I'll say, set mindset when it comes to the types of businesses we like to own, we do these types of thematics or white paper analyses fairly early on to identify the sectors we want to go after. So obviously essential businesses or real product adjacent type businesses with market leading share. And Fosber hits that to a T. Amazon boxes, corrugated boxes, however you want to describe them, are critical to how our logistics systems work today. And that's not going to change anytime soon. And Fosber is a backbone to making it all work, as we would say. So it's a very durable and essential business and really fits that alleyway. So with this business, for example, we had done a lot of work in the packaging machinery space, particularly back around the 2020, 2021 range. And we started meeting executives in the space at that time, anywhere from the public players like a Cadent to some of the more private guys that were just originally trading back then. But the reality is, even if you're doing the work at that time, there's not necessarily any particular action to be taken. Values can be high. Businesses might not be for sale. So you do a lot of this pre-work up front, identify, hey, this is a sector we want to invest in, and just keep close to it. And look, Fosber was one of those businesses where, to be honest, we weren't ever sure if it would be sold. It's being sold out of a Chinese public company. It's a really niche asset where it never really belonged with its corporate parent. So at the time that we were doing all these thematics or white paper, it never really stood out to us as a, hey, we can go and buy this. But lo and behold, back in April of last year, almost a year ago, they decided that they wanted to sell the business. They have had extraordinary success with it over 10 years. And we felt it fit right down our alleyway and was the right time to go and acquire it.
So in acquiring it, ultimately, what is the profile for Fosber? It was owned by a Chinese company, but it actually is located elsewhere.
It's based out of Lucca, Italy. The majority of its sales are out of the US. And it's, as you said, owned by a Chinese company. When Dongfang originally bought the business, it was substantially smaller than it is today. Think in the realm of 10% on an earnings basis. And the business has grown rapidly since they bought it over 10 years ago. And the reason for that is exactly what we spoke about. They were a small business, had really good tech, and were very customer focused. And because of that, they kept gaining share and gaining share and gaining share to become a much larger business that a Brookfield, given our scale, can really help drive further growth and really mature the business over time. But it's important.
I think about it from a customer perspective. And I think if you ask a customer what it is in reality, what it is an Italian business. So this is an Italian heritage, Italian engineered, Italian designed business. And that seeps throughout the rest of the globe. in this part of Italy where they're located. You have to think about it as almost the packaging capital of Europe. And this is really where the expertise in machinery and expertise in new technologies, et cetera, happens. And a lot of it's because of Fosber. Really well owned by the Chinese, and the largest market being the US, it's an Italian company.
We traditionally try and buy businesses for value. And when you have a setup where you're buying from a Chinese public company of a business that has grown so rapidly, oftentimes, and we'll talk about this momentarily, but there's a lot of value creation that can be had because the business does need help maturing or getting to that larger scale phase of their journey versus being a smaller startup and just winging it, for lack of a better phrase, along the way. So we felt that there's a good symbiotic relationship we could have with the management team in us buying them and helping them and driving them towards that next stage.
Matt, given your experience deep in one of these businesses and operationally, when something like this and even a name like this that rings a bell for you comes across your desk, how do you evaluate that value creation opportunity?
That's a great question. And again, I think it's really important to note that it's really a team effort, right? It's our operations team, it's our investment team. We're all rolling up our sleeves and doing the work. One of the things we talked a lot about as we were looking at this deal, and the phrase we coined was, Fosber is really good at things that are really hard to be good at. And what I mean by that is they have this incredible customer service that I mentioned earlier. They've got this incredible growth profile. They've developed tremendous amounts of new products very cost effectively over the past decade. And what that's led to is a really incredible growth trajectory where they've grown double digits CAGR for over a decade. So objective one on a business like this is get out of the way and don't screw that up. So we talk a lot about that, and we talked a lot about that with the management team as we looked at it. With that said, it's very true what Craig pointed out, that when you think about that rapid growth, you think about owned by a Chinese industrial, we acknowledged and saw right away some opportunities for improvement. And we talked openly with management about that throughout the process. And it doesn't always work this way, but in this case, it is working this way. They agree and they see the same things we see. And so a couple of the areas, just to give you a couple examples where we're going to focus, is while they're exceptionally good at growth, as I mentioned, data and analytics, which is often the next frontier to keep growth going, is not necessarily their strength. So we're going to be upgrading their technology and bringing in data and analytics to help them get after sales growth more quickly, for example. Another thing, as I mentioned, they're really good at what I call cost-effective new product development, which is phenomenal. We want to keep that going. But again, you think about the next frontier of product development, it's going to be AI and digital technologies being integrated more into their machines. We think we can help them go faster in that area as well.
Yeah. It almost feels like from a previous time and from the modern times coming together and the sum is greater than the whole of the parts kind of thing.
Yeah, we talk a lot about that on deals, relationship, and how you connect with the management team. Well, it doesn't necessarily win you the deal. It can make the value creation plan much quicker and much more successful post-deal. And I think on this one, we're really aligned with management, and we're excited to really get rolling on that thing over the coming months.
As you said, this was a carve-out. Is there any way that we approach carve-outs or we think about carve-outs? We know we like them, but how we approach them maybe distinctly from other deals or other types of transactions?
Yeah, look, at least from my perspective, and ChemoX is also a carve-out that we did within the last 18 months, right? I'd say it's twofold. The first is traditionally with these types of complex carve-outs, you can differentiate and find value along the way, where, to Matt's point, giving them access to data, helping them drive or even spend a bit more money either in a plant or a capital program, because most often with these carve-outs, the parents are just running them for cash or not really wanting to invest in them because they know they're going to sell. So just having that access and knowing it's available excites us from a deal opportunity perspective. And then actually executing them, we have a lot of resources at Brookfield, which are super helpful for every phase of the way. We talk a lot about operations, value creation in the transformation office, which Matt's team does, but there's a lot more behind the scenes that go into it. Things like IT, HR, entity structures, different countries that you're in, things along those lines, like employee perimeters. There's a lot of different aspects that go into a carve-out. And having people at Brookfield who have done it a million times, are IT, HR, finance experts that you can leverage, makes it a much more seamless transition and less complicated despite being complicated. So for us, we see it in twofold. We have the resources and expertise available in-house to do this effectively and efficiently. And we think we're going to find value along the way. So it's always an exciting opportunity when we find these types of businesses.
And I think what's unique about Fosber, and I want to just point this out, because both on the investment side and the operations team, I think this gives Brookfield an advantage. This was truly a global effort. So we talk about a Chinese industrial, complicated. We talk about an Italian headquartered, Italian heritage business, and then North American being its largest market. So we had investment colleagues as well as operation colleagues from our team in Asia, our team in Europe, and our teams in the US and Canada working on this project. And we'll continue to do that post-close. As a matter of fact, I was literally on the phone this morning with my colleague from Asia talking about some integration opportunities in the Chinese facility post-close.
I am curious about what is this interesting, it seems, dichotomy of what you're teaching us about Fosber and how long they've been doing this. It's there for the long term. You're talking about a machine that needs to work exactly the way you want it to work for decades. Relative, Matt, to some of what you're describing, which is a lot more innovation, a lot more learning that they can embed into their system. So how do we marry those two time horizons or almost time lapse kind of dynamics? Because they're not necessarily always the same.
No, it's a fantastic point. And actually, we did a lot of work on that throughout this process. I think there really are two things happening. One is, yes, there's this incredible after-sales opportunity once the machine's in, as you just alluded to. But you're right. Once the machine goes in, it goes in for up to 20 years, a long period of time. So you ask yourself the question, well, how are you selling more machines if they're in there for 20 years? Well, the reality of it is that there's a tremendous fleet of aged machines that are still out in the marketplace globally, and many of them really lagging behind in technology. So the boxes are not made to the quality that you need. The speed isn't done effectively for the box plant to make money. So as those machines continue to age, there's still a significant opportunity for share gains for, as we talked about, there's kind of a duopoly in the marketplace right now. So a lot of the aging, less technology players are really losing out while Fosber and the other key player in the market are growing. So we think that trend is going to continue. So you're going to get an opportunity to sell the machines. You're going to get an opportunity to service and give after-sales parts to those machines as long as you serve it extremely well.
We think of it as a large football field complex machine. The reality is, too, these large machines are made up of 20 to 30 small machines, too. So what you're seeing, particularly with how much automation is being driven into the industry and into these parts from Fosber, is customers are starting to say, I don't want to do the full machine, I'll do parts. And that can oftentimes allow Fosber to gain incremental share and, importantly, allow their customers increased automation, increased data access, because Fosber will be able to see every change they make on the line or every single box they make and things along those lines. So if you keep doing it piecemeal, which is what Fosber has been successful at over time as well, it can really help drive growth. And it really plays to the theme of automation-driven change and automation-driven growth.
Has there been anything else that surprised you or that, even given both of your experience in the space, you didn't know before or that stayed with you after you went through this transaction?
Yeah, I think, at least from my perspective, what has been the most refreshing or exciting part of this deal or meeting and learning Fosber has just been, to Matt's earlier point, customers really like them. If you look at NPS scores, customer interviews, you talk to anyone in the industry, it's, I don't want to say all positive, but all positive from what we can hear. And oftentimes when we find businesses with that type of setup, they do what's really hard really, really well. So from our perspective, you have a setup here where Fosber's, I don't want to say destined for success, but destined for success because they know what comes first, and that's the customer. And we can help with the sausage making to get them there faster. So from a investment team perspective, we stare at spreadsheets all day. It's extremely refreshing to see that and gives us a lot of conviction in the business and particularly in the people, because the people are going to drive the outcome of our investment no matter what.
Let me add one additional idea. And I mentioned this already, but the art of this one, we believe, is going to be helping improve some areas that we know that they can improve on and letting them continue to do what they do. They are just so good at it, so strong in that area. We do not want to get in the way of that. And I think the challenge also is going to be that there's a lot of passion on this team and a lot of knowledge and pent up desire to do some additional things on this team, because I do believe they've been held back to some extent. So the challenge also is going to be to focus, to say, what are the 4 or 5 big things we can do to get the biggest impact for the business and keep that growth train going? And if we can do that, I think we're going to have a really good outcome with this business.
Well, I know I'm going to be helping them by just the sheer number of deliveries that I get. So everyone wins.
Perfect.
Thank you both for joining us. It was great to have you on today. I learned a lot.
Thanks for making it easy. We appreciate it.
Yeah, thank you.
Thanks for listening to another episode of Brookfield Perspectives. Make sure to follow us wherever you listen. You'll be the first to hear when new episodes drop.
This podcast is for educational and informational purposes only and does not constitute an offer to sell or a solicitation of an offer to buy any securities or related financial instruments offered or sponsored by Brookfield. The information and views discussed are subject to change without notice. Any investment involves significant risks, including loss of the entire investment.
Audiation.